What's happening, guys, and welcome back to another Sunday Scan. If you're joining us for the first time, we are Investors Underground, and every single week we do a weekly scan or a Sunday scan to go over what's been moving in the market, what's been working, and then we go over what are the top watches for the week ahead. And in between, we go over a lot of trading lessons and timeless concepts to improve your trading. So we have a lot to cover this week. We're going to kick it off with Centerpoint is running a fantastic deal for the next 3 months, 3.5 months. If you sign up and get a new account with Centerpoint, if you meet their minimum, then you will get 3 months of free commissions, 3 months of free DAS access. And then the real kicker is you get lifetime half off commissions. So if you sign up now, it's a perfect time to take advantage of that. And a sweetener on top of that is that for the first 50 accounts that sign up, you will also get a copy of the Legends playbook. So there's never been a better time to sign up with Centerpoint, and they're running that deal. Everything ends around March 31st. So the sooner that you sign up, the more time you get, and the longer that you wait, the less time you get for those free commissions for that period. So check out the link in the description and in the comment section, and be sure to get all the details for the Centerpoint lineups there. We have a lot of things to go over on Scan this week. We actually took some questions from Twitter, and so we have a couple that we're going to go over and answer. We really want people to be engaged and feel like what they are wanting to know actually shows up on Sunday Scan. And so this week we took questions on Twitter, and then I encourage everyone to leave comments in the comment section telling us what is on your mind. What do you want to go over? What concepts? So before we get into all that, I will give the disclaimer now that I'm not a financial advisor, and these are not buy or sell recommendations. Everything that we're going to go over is for educational and informational purposes only. Now let's get into Scan for the week. And we will kick it off with answering some of those questions from Twitter. So the first question was really about liquidity traps, and it was a frustrated tweet saying that I've been trying to trade liquidity traps for a couple of years, and the person keeps falling into the same habit of basically liquidity trap looks like it's going to start to work. And as soon as they enter, sometimes it flushes, it stops them out, and they just can't get the setup to work for them. So what is going on? Why is that happening? And is there a way to kind of fix that problem? And yes, I know exactly what you're talking about, and I do have some good tips and tricks to basically improve your hit rate with liquidity traps. So I'm going to use a couple of examples to help to demonstrate this concept, and I think it'll make a lot more sense by the end of it. So for anyone not familiar, a liquidity trap is a stock that's had a big move up. So it has a day one, a huge spike. And the most important thing is a ton of volume associated with that. So usually you're looking at, tens of millions of volume, sometimes hundreds of millions of volume. The more volume, the better on that first day. And it's usually the highest volume over the last, couple of months, or even the last year, even sometimes the highest volume ever. So you want something that has a day one of a huge move up and a huge spike associated with that. And then you want several days of consolidation after that. And so what that means is that after that first day, you want the following days to basically have the volume dry up, and then the price to kind of consolidate and go sideways or down. And then you'll get to a tipping point where it stops going down and it starts to kind of, creep back up a little bit. So I went over this last week that this is like, you've all heard of the right side of the V concept. This is like the right side of the U concept with liquidity traps. And so, you might have a much more gradual base, but this is basically the people who are in from day one, the longs getting shaken out, and the shorts that are in there from day one who are sizing based on that big liquidity, they're still in there just probably trying to ride this back to, where it came from. So what happens is when that starts to stall and when it starts to kind of creep back up and have that subtle U, that tick back up in, price action, you can see if you were to draw some lines here, underneath this base, you can see it's underneath, and then it comes back up and it starts basing over that. So basically, after you have a couple of days of consolidation and you have that right side of the U start to reclaim some of those levels, now it becomes on watch for a liquidity trap. And really how a liquidity trap works is that if you start to grind above, certain levels that the shorts have an average in. So if the shorts are, they have an average somewhere in the $1 range or something like that, as it starts to tick back up, if there's still shorts with size in there and there's not a lot of liquidity, they tend to get squeezed out. Now, this also had some other sympathy plays. Some other things were going on with the market with another stock that this stock is involved in. But basically, that was another like sweetener on top of the setup that was already there. So now that you kind of understand the liquidity trap setup, how do you actually enter that without getting stopped out? And so I'm going to zoom in to some of this price action. So I think you can see what the person is talking about. So I'll zoom out a little bit. So here we have the day one move. You have the consolidation. So it's important that several days goes by. So what is actually happening is that during that consolidation, the volume is really drying up. And then also after a couple of days, you're more prone to have buy-ins. So basically, if a ton of shorts are lent out during that initial move, during that crazy volume, after a couple of days, the clearinghouses and everything have to start to match those orders. And if they can't, then they have to start getting buy-ins from people. And so sometimes shorts are they're forced to cover, and sometimes it's another event that causes the cover to start to come in. So as this starts to creep back up, this goes on watch for a liquidity trap. So on the day that you're supposed to, or that you can potentially enter, how do you do that in a way? So this is what the person who left that comment is talking about. What happens is that they are anticipating a liquidity trap, and then they're buying these breakout candles up here. And what happens is that on any flush, they're getting stopped out immediately. And so even if the liquidity trap works, they're getting stopped out and it's not working for them. So here are a couple of tips and tricks to prevent that from happening. One, if a couple of days of consolidation has gone by and you're anticipating a liquidity trap, what you want to do, if you are anticipating, you want to use support levels as your entries instead of breakout levels, unless it meets very strict criteria. So that means as this is starting to work, you could be mapping out these levels around here as it's reclaiming. So possibly, drawing some lines on your chart and positioning in, once that resistance flips to support. And then also as it's grinding up on that day, you can give it a little bit of time. You don't have to buy right off the open. A lot of times these swipes right off the open, those are more prone to stuff and test the bids. You don't want just like a thin swipe up and then assume that that holds. You want to see it basically come back and test. And as you get those tests, you can see where is support forming. Support is literally where are buyers stepping in. And so what you want to do to lower your risk is to position in close to where those buyers are supporting it, as opposed to, during this very weak thin swipe up. And then, your risk reward is totally changed on that. So what you want to do is be a little bit more patient and wait for those, bids to be tested. Wait for some flushes and see where it catches. So, you could draw some support lines here and then have a reasonable level. So there was one ugly candle in here, which would have flushed below that. If someone was using a hard stop, yes, that would have triggered them out, but you could see it immediately reclaimed. And so it could be worth another shot there. Or if someone's using a mental stop, you can wait a little bit longer to see, does this just flush out and immediately reclaim, or does it flush out, retest, and reject? And then that is a different set of circumstances. So identify, when is a liquidity trap? When has it had a couple of days of consolidation? When is it starting to reclaim levels? And then on the day or the couple of days where you think it could actually play out, wait for it to form some support and use that as your risk. So when I entered this trade, I was using that 95-ish area as my risk, and I was entering around the dollar area, $1.05 area, or something like that. So I have, 5 or 10 cents of risk if I'm wrong. And then if I'm right, I have, 40, 50, 60 cents of reward. So that's a much better, reward to risk ratio than someone who's buying this, on these spikes here, and then they're stopping out. And then, it's messing up the entire reward to risk ratio. So here's the solution for the person that left that comment. Stop buying these morning thin spike ups here and getting stopped out down here, and wait, be more patient and wait for those bids to get tested. Wait for those flushes, wait for support, and then be patient and position in against that, using some kind of reasonable stop below there. And then, you can add in a partial position here. And then as it's starting to work, you could potentially add in more, but you want your initial to be based on a key level, either a reclaim when resistance flips to support, or when you just have outright support here. So mark off those levels on your charts, and you can see this is a level here. This is a level here. And this is a level here. So as you're seeing those levels built, use those lines and then positioning close to those lines instead of chasing them. And I would also venture to say that the person likely doing this is probably not tracking these on their own. They're probably waiting for it to be mentioned in chat. And so they haven't done any, they're not familiar with what's been going on over the last couple of days. They're just saying, oh, liquidity traps, I'm just going to chase this one and it'll immediately work. And that's not how they work. You need to understand what levels, where they're coming from, how much consolidation, and then position it against those lows. And that gives you a much better reward to risk ratio. So that is one way of positioning in to really deal with that issue. Another way, so Nate had a great trade on this liquidity trap on PLRZ. So basically, you can see a very similar situation to this liquidity trap playing out. So I will zoom in here. So basically, day one, I'll zoom out a little bit so you can see the move in general. But basically, day one, you have a massive move, massive volume. That's what we talk about. That's what we like to see with liquidity traps. And you can see that happening here. Day one move up there. Then you have a couple of days of consolidation. And again, that right side of the U. So here, after a couple of days of consolidation, ticking back up. Look, the same concepts, drawing out those key levels as it's reclaiming. And so you always want to keep in mind, where are the shorts most likely, where do they have their average at? And then as it starts to get above that, that is when you can start to anticipate the squeeze too. So if you are, entering this as it's actually squeezing and working, how do you do that? So there's a couple of nuances here that can help you in that circumstance. And so this one actually triggered after hours. So here are some tips and tricks to deal with that. So if you are entering it more as it's squeezing, notice that this happened in after hours. So this was after a couple of days of consolidation, and it started to reclaim those levels. Again, draw out the levels here, draw out the levels here. And then as it starts to squeeze, what you're doing is, if it's getting above that average cost where most of the shorts are in, and you see it really starting to trigger and tighten up, what you can do is enter again versus some of those key levels. So if you have those lines on your charts, then you have very clear areas where you can position in against. And so as it's working, you can then position in and use something like prior bar candles. So a lot of times for liquidity traps, I'm using either maybe 2 minute, 3 minute candles to kind of keep me on track there. So let's see, if we were to drop this down to, let's do like a 2 minute candle or something. So we'll put this back, and I'm just going to walk through this. So a lot of times when something is actually triggering, what is happening is you're getting a supply-demand imbalance as that's happening. And so what tends to happen during supply-demand imbalances, as shorts are scrambling to cover and there's not enough liquidity, is that you will get candles stacking on top of each other. So look at how many candles go in a row, and you can use your like a prior bar as a risk level for some of these liquidity traps if they're triggering and if they're actually squeezing, as opposed to anticipating that squeeze. So you can see one candle after another, and it's not really breaking the prior bar there. And so you can basically position in a lot of times and catch a nice move off of that just using a prior bar. And then as it starts to work and you're taking a little bit of profits, you can widen your stop to maybe 2 bars or 3 bars or something like that. And so that way, if it gets a little bit more choppy up here, you can still stay in. And that's where things like trend lines come into play, where as this is squeezing, you have it super tight, and then you have it enter a trend of just that short covering there. And so massive move from those 6 or 7 areas, or even 8, all the way up to the low 20s there. So those are just a couple of strategies that you can really use to make liquidity traps work for you. They are effective. And so just think about track the setups as they are setting up. You have that first day, big volume, then a couple of days of consolidation, the right side of the U. Draw those key levels, and then figure out, are you anticipating the liquidity trap playing out, or are you actually participating in the squeeze? If you are anticipating the liquidity trap playing out, then what you really need to do is position it against support, clear lines, see where the bids are testing. And if you're actually getting in as it's squeezing, then you have to use a tighter risk, like prior bars on the 2 minute or 3 minute. And then as you start to pull away from your average, you can get a little bit more aggressive, and you can go into 2 or 3 bars, or you can just use a general trend line to keep you on track. And then after a liquidity trap has played out, after the shorts have been squeezed, then you can expect a fade back down. So that is the time to get out if you are long. So what I do for exit strategies is, as they are working, I basically tend to take a little bit of profit into the speed up, and that helps to cushion my risk a little bit more. So let's say this were to totally reverse and just flush right back down, at least I'd walk away flat or with a slight profit instead of red. And so that is just a key concept to keep in mind for that. So hopefully that was helpful. That was the first question about how to basically solve that problem for liquidity traps. And I think that will make a big difference in your trading. So another concept that I wanted to go over, and I will zoom out a little bit here. On Friday, there was another stock, WHLR, and this was another stock that was set up for a potential squeeze. And there was something that I wanted to go over with this. So basically, WHLR was in play, and I will put this down to a smaller time frame here. And so you had that big day, in the morning, lots of volume, and so this was on watch for like a potential same day squeeze. So while a liquidity trap takes a couple of days to play out, you need that consolidation, you need the volume to dry off, and then the volume comes back in, squeezes. This is like a same day squeeze. So sometimes when you have a low float with a high float rotation, which just means that there's a ton of volume traded compared to the float rotation actually on it, or compared to the float on it. So if this has a couple million shares outstanding or a couple million shares as a float and is trading 75, 100 million volume, that is a high ratio of the volume traded on the day to the overall float. And the higher that ratio, the more likely they are to actually squeeze out. But there was an exception with this one. So usually on a name like this, I'd be watching for that big move up and then for it to kind of consolidate, and then maybe towards the end of the day, grind up towards those averages that the shorts are in and squeeze out and cause a symmetrical move to the upside. But this one, I started to go in with that bias, and then I got a gut feeling that this was probably going to fail. And I just want to walk through why I got that gut feeling and why it played out, and to help you avoid getting caught in some of these squeeze plays that don't work. So this is like a failed squeeze play, but it could be on watch in the next couple of days for a liquidity trap, and I'll get into that later. So even though this had the big move up, even though it had a ton of volume and consolidation throughout the day, this one looked a little bit too perfect. So sometimes when they're soaking really well and like they're hanging out and they look like they're going to break out, when you have that happen for like an hour or so, what can happen is that the shorts will be like, yeah, this looks like it's probably going to squeeze. And as you get those tests of that key level, you can have shorts actually starting to cover in here at the same time that you get those breakout buyers starting to, try to chase that breakout, thinking it's going to squeeze here. Oh, it gets stuffed, and squeeze here, it gets stuffed. And what happens is that you change the supply demand ratio or the supply demand profile on a name like this, where it's long crowded in here and the shorts are not really present. And so what happens if you have everyone anticipating a squeeze, it gets long crowded and it doesn't actually squeeze? If it gets below some key levels, you usually have a big flush out. So that is just a warning sign for anyone who plays squeeze plays. Be aware of that. If it looks a little bit too perfect, if it looks like it's been trying to break out for a while and it just hasn't been able to, there's probably a bunch of longs in there who have been anticipating that squeeze, that if it gets below a risk level for them, they're going to stop out and that can flush out. So that is a way to avoid, getting caught in some of these breakouts that stuff by just noticing some of those nuances there. So now WHLR, something like this will be on watch over the next couple of days for a potential liquidity trap. If it kind of holds these levels, if it looks like it's going to break down a bunch and it ends up holding and you get that right side of the U and it starts to creep back up. But the main concept for that one was really to go over, how to avoid getting stuffed in some of these squeeze trades like that. So hopefully that was useful to you. We'll go over a couple of more concepts and names on scan now. So MSTR, Bitcoin has stayed relatively weak. It did have a good bounce here. You can see this overall trend of when MSTR was basically going from a premium to net asset value back down to more a 1-to-1 ratio. So what net asset value really means is that if you were to look at MSTR of just the assets on their balance sheet, like the Bitcoin that they own minus debt and other things like that, like if you were to liquidate the company, what would it actually be worth in like the assets that they hold? Then you have a certain that is like the NAV of being the net asset value. And so a lot of times MSTR, some of these other crypto plays, they've been trading at 2 times or 3 times the value of the assets that they actually hold. And if at the end of the day, if their only business is holding those assets, then over time and in more bearish environments, you get that retracement of NAV, that compression to basically they're only trading at what they're worth at. So that's kind of what happened during this big trend with MSTR here. And now you're kind of in a stage where maybe I think it might just be going sideways. So it's not really downtrending anymore because it's already pretty much at the net asset value. But the problem is that MSTR has been such a major buyer of Bitcoin over the last couple of years, especially over the last year. They were like 20 or 30% of all of the buying that was going on. if they don't have that premium in their net asset value to basically issue shares, issue preferred, and buy more Bitcoin, they're basically tapped out with buying power for all intents and purposes. And so that is why Bitcoin is stalling, in my opinion, and that's why I think MSTR will just go sideways, for the foreseeable future. Walmart. So this was a name that was on watch. I actually had calls early on in the week. I called it out in Investors Underground. The problem is that after that, initial move up, it actually started to stall a little bit. The market was getting a little bit shaky. And so I exited the calls for flat, but the calls ended up going, 4 or 5x. I had the 111 calls. And then I ended up getting stopped out for flat. So that happens, but this was a relative strength name. And so basically after Black Friday sales were strong. This has been a strong name. It's good chart on the daily level or on the daily chart. You can see that flat base, which like Ariel talks about, breaking out of a major base right there. So you had a confluence of factors, relative strength, Black Friday, recent catalyst. It's also had some catalysts with ChatGPT and OpenAI, and then you basically had a nice move up there. So I ended up missing it, but it was a good demonstration of what a relative strength name can do, especially if you have call options or if you were in equity, you might have been able to hold that a little bit better, but I got stopped out of the calls because my attention shifted elsewhere. Silver. So I have a couple of trend lines on here. Silver, I did try to get some puts on this. It didn't work. This is still in trend. So a lot of times after a big move, it's hard to resist the temptation to want to either short something or get puts on it. But having these trend lines can actually save you a couple of headaches and not going back to the well every single time when it's not ready. So you can see that this here is a general trend, normalized price action over a period of time. And now it is in a new trend. And now you're just getting up to the point where if it starts to speed up, if you get that third trend, that parabolic, that is when after that blow off and after that sit back, that is when you would likely get a really nice mean reversion trade on it, unless it kind of just fails to follow through and breaks below this trend line. But just keeping these lines in place can keep you out of a lot of trouble and going back to that if it's not working. Just realizing that this is just normal price action for this current trend that's in there. Yes, it's up a lot, but that doesn't mean that it's overextended compared to its prior trend. BE. So this name has been on watch all year, and this is starting to reclaim really nicely. It had this series of trends here, big mean reversion with the momentum market, and now it's starting to build up in relative strength again. And you can see that, it doesn't take much for it to, after a week or so, it was, testing low levels down here, and now it's already back up to this mid range. So this is right back in trend around that 118, 120 level. And so this is back on watch as a swing name as long as the market stays bullish. Just to reiterate, this is the main watches section now. So I'm going to get into things that are actually on watch for the week ahead instead of just recapping the general market action. So BE back in trend, just a broader sense. So you can see normalized price action here, big mean reversion, and now you're kind of going into another thing. This actually reminds me a little bit of IONQ during the first quantum run, not this most recent one over the last 6 months, but the one from last year when it would have those nice looking chart, and then it would have a big mean reversion, and then it would just get into a wider range of an even nicer chart up there. So BE continues to be on watch for more upside. PBBT. So this has been on watch for a potential breakout. This is not quite a liquidity trap. This, because so much time has passed, shorts are not necessarily still in here. This is more of like a load day where someone cleans up the chart. There's a ton of volume, and then maybe you have a fund or someone sitting in there waiting to issue another press release or get it above a price threshold or something like that for some compliance. So this is on watch. If it starts to base above these levels, again, it's on the right side of the U, but it's moving very, very slowly. So as it starts to perk above these levels of 90 or so, 90 cents, then that's when it would be in play. I think you would see the volume come back in and maybe a press release, and it could squeeze out. So that is on watch for the week ahead. LITE, so this has been a major runner, but again, going back to that silver concept, look at the trend of the normalized behavior. It's still just within its trend. Yes, it's up a lot, but it's within trend. What you need to see for a real mean reversion is a massive parabolic and forming a new parabolic trend. And once that parabolic trend fails, that is when you can get that big mean reversion. So this is on watch. Continuation, as long as it stays in the trend, but once it starts to speed up and go parabolic, that is when I flip my bias towards mean reversion. Robotics. So we had another question on Twitter, and that was basically, what do you think about the administration's pivot towards, encouraging robotics? And so robotics in general, and some of these sector moves. This is how sector moves tend to happen. You usually have either some kind of a political initiative or some kind of recent news or something to act as a catalyst for a sector. So robotics have been in play on and off over the last year, 2 years or so. But if you have the administration actually pushing robotics, that is when you can start to have funds and liquidity and volume actually get interested in the sector. And so once you have the big players interested in the sector, that's when you can have some sustainable moves. So a lot of good trades. Nate had some great trades on the robotics names. I had some great trades on the robotics names. Nate was in a couple of these. I was in KITT. This was a really nice one, especially for that most recent move. So let's see here. Basically, you had some of those headlines around it, and then you had this big day one trend form. So I got in somewhere in this trend and then wrote it up until the afternoon. So it wasn't a massive trade, but it was a nice 20, 30% gain, whatever it was. And then Nate actually held this a bit longer. He got in sooner. And so he was like more keeping this overnight. And so he was trimming along the way a little bit up here and then got out over there. So the small cap names in a sector move basically tend to move the furthest, but they're less sustainable. So they have, their 100, 200% moves, and then they usually just crash and consolidate for a while. And you compare that to some of the bigger names like SCRV or RR even. So SCRV, you can see, yes, it's had a slower move, but it's more sustainable because you have, funds are more able to actually get involved in some of these, and they can be slow and steady for periods of time. So during sector trades, I like to identify what are the basket of names that can potentially move. And so you have the small caps, the mid caps, the larger caps. And so this is more of like in the mid cap sector. So we went over some of the small cap ones that have the big moves, participating in those trends day one, day two, but then expect them to have those big reversions and consolidate. The mid cap ones tend to trend slower but steadier. And then you have the this is another mid cap trend, same thing as SCRV. And then you have the large cap robotics plays. So Tesla, this has been really, really shaping up over the last couple of months. You can see over the last couple of years, big base building in here, and then coming up on those breakout levels. And most recently, we had some areas in here where this was building really nicely, but then had that momentum flush after the quarterly event. And then you had it start to rebuild. And now you have the robotics theme with a big potential daily chart level. And you had some very bullish options flow associated with it too. So I think that if the robotics theme stays in play, if the market stays somewhat bullish, I think that you're really going to have a massive blow off move in Tesla over the next probably, couple of months or 6 months or something like that, where you're getting into the 7, 8, hundreds. And I think it's just going to be a massive move. So especially over 2026, I would be on watch for Tesla to have that massive move. Again, it just has so many different overlapping things. And now that Elon and Trump are back on decent terms, you don't have that headwind from the business side anymore like you did earlier on in 2025. So Tesla will be on watch for continuation. It's really just picking your spots, looking for areas of support to position in against, for a long bias, either with calls or with equity. And then as it gets super overextended, that's when you can flip your bias to mean reversion before resuming an overall uptrend, in my opinion, unless the market falls apart, in which case, any speculative momentum names, they get crushed with that. SMX. So I had a couple of questions on Twitter about this. People really, asking for my thoughts about this. What do I think it's going to do? I'm going to talk less about what I think it's going to do and more just about the concept of this and why you get so many people interested. So names like this that have been, reverse split names or very high share price. At the end of the day, they're very low float names. They're very erratic. And they basically are not good trades for most people to do. Again, in order to make a good trade, you need a stock that is in play. You need something that is setting up to a pattern that you recognize and that is repeatable. And otherwise, if you're just looking at something that is moving erratically, super high, super low, unless someone actually has a very solid strategy around that, most of the time, especially when you're involved with like these crazy circuit halts, all the time, you're most likely just going to get chopped up or lose on something like this. And so my advice is that, you're better off focusing on things that are a little bit more, repeatable, a little bit more clean. You can have some trades in here, but personally, especially if someone is more new, just avoid it. You can see this is like a microcosm of some other things that we've seen You can have a big base here and then some squeeze up. But Nate compared this one to RGC. It's the exact same thing. It's just one of these names where you have extremely constricted supply, and then you have the share price go nuts because of reverse splits. And so a lot of people are not familiar with how low of a float this is. And so you'll have bigger players start to get involved and try to short this, and it just goes on and on until basically the company itself releases more supply. And so until they do an offering or until they do something to basically, crush the supply demand dynamic again, that's when it goes back to normal trading. But for something like this, for most people, you're not going to have a whole lot of edge doing this. So my advice would be to forget names that are trading, from 200 to 500 to 400 to 600, like with all these crazy circuit halts. If you don't have a strategy for them, you're better off focusing on things that are more understandable, that trade a little bit more cleanly, and that are repeatable, because you don't want to have, massive position, something like this, and then it gets halted on some crazy SEC event, or because of recent volatility, or because of the company does something. Like, there's so many variables that can happen with this. Most of the time when you have something in this price range that's super low float, your edge is not going to be as great as it normally is. Yes, there might be pockets where you can trade it, but the people who are more experienced probably know where those pockets are, and I would not encourage most other people to be toying with something like this. Some of the rare earth names were back in play a little bit. Again, the administration was talking about basically, how do you get more rare earth supply in the U.S. because China has a 1-year kind of temporary pause on their restrictions of that. So there were some comments by the administration. So some names in the momentum space, in the rare earth space, have started to pick up again. So USAR, UUUU, and some other ones have also gotten some steam. So these are on watch for potential upside if that theme continues. And then you also had CVNA, which is a recent S&P 500 ad name. So talk about a comeback story here. You can see from the lows of 2022 or 2023, looking like it was going bankrupt, up to here. This is what you call a turnaround story, and just where a company survives, the margins, keep increasing. You have some money come in, and just a total turnaround. So this will be on watch for a move higher, I think, breaking out of these all-time highs here. So on the S&P ad, it gets added on December 22nd. I think it'll run up into that, and then maybe a big mean reversion. So that is basically all I have on the stock side for this week. A couple of notes. We do have the FOMC meeting this upcoming week for the Fed interest rate decision. It's expected they will cut interest rates, but the thing to watch out for is, how is Powell positioning policy moving forward? Is he going to say, yes, we'll cut this time, but there's no cuts next time, or we think that we're at the neutral rate now? So you just have to watch for his comments on that meeting, and then see how the market reacts to that. So those are the main things I want to cover in Scan this week. And again, check out that Centerpoint deal. It is fantastic. It's the least risky way that you can ever basically get involved with a new brokerage, and just get all the benefits with almost zero downside. So again, you get until March 31st. You get free commissions, you get free DAS access, platform access. And then also for the first 50 signups, you get a copy of the Legends Playbook, which is the trading course that IU just did in partnership with a bunch of legendary traders like Lance and so many other people in that space. So definitely check that out. And then another benefit of that Centerpoint deal is that if you sign up new accounts for that deal, then you get half off commissions for life. So it doesn't get much better than that. If you're interested in that deal, check out the link in the description and in the comment section. And again, I encourage everyone to leave a comment. Like you saw me do on this scan, I will go over your comments. I'll try to answer your questions and have it be a real value add to you. So leave the comments down below. Just, think of a question. What is something that you've been struggling with? What's something you'd like to see? What is something that could change your trading for the better? And then I'll give my take on it in the comment section. So hopefully everyone enjoyed that. I hope that you have a great week. And a final teaser is that into next week, we may have a special guest appearing on here, someone that you all know and love in the IU community. So we'll see if we can get him on, but stay tuned for that. And we might have a nice surprise for you next week. So that's all I have from me. I hope that everyone has a great trading week ahead, and take care. We'll see you in IU.